Live from Spare Bedroom Studios, you are listening to Under PDT.
On today's Under PDT, we have AiPTrades, aka James. We'll refer to him as James throughout the episode, but you guys know him on Twitter as one of the best fundamental DD micro cap traders there is, both long and short. And we weren't lying. We finally do have an interview, Wes.
Yes. No. Well, a lot of people were saying that, you're not actually ever going to, or they wrote us off. But all 200 followers on Twitter now will see that we do have an interview.
James, by the way, you absolutely have to put this on your Twitter because we're shameless when it comes to views, follows, whatever you want to call it, whatever the millennials are calling it. So make sure you plug us.
Our most viewed tweet so far is the IGC headquarter tweet. We're actually getting a lot of trolls off of that, which is great.
We're getting trolls and we're getting fans alike. And I have to say that was Wes's work, and it was a really good tweet. I cracked up when I saw it. We got really good interaction on that by our standard. We're no furu over here. We're not getting 8 zillion likes on our tweets, but
Yeah, don't be embarrassed for tons of shameless plugs. It's fine.
Yeah,
all right. So one thing we do on this show every week, we have a long and a short. We're not going to do one this week ourselves personally, but James, since you're on, you're doing a long and a short of the week. So what do you got for long?
My long of the week is Brett Kavanaugh and his upcoming workout DVD I see coming.
We're going political here. Political.
The Brett Kavanaugh workout DVD.
Yeah, obviously him and all his friends, lifting weights and all the workouts they were doing throughout his life. I'm looking forward to it.
Okay. I think that's going to be an excellent one. Very good start. What do we have short?
My short is Kanye West. Kanye West, his political views. I don't know which side of the fence he's on. He's for Trump. He's for Colin Kaepernick. So I'm just shorting Kanye.
Do those two things insinuate being on opposite sides of the fence? I thought they were the same.
That's almost like a box trade, I think, for him.
Yes, that's a good analogy. Good, well done.
That's right. You don't have to pick a side when you can box. Welcome to Twitter trading.
There you go.
All right. Well, I guess let's get into it. We'll let Wes kick it off here with the actual brass tacks here. Get down to business.
Yeah, man. So, you and I have been talking trading for years now. Been doing it for a while. What do you see as the biggest barrier to making it trading full time?
The biggest barrier, I think, aside from the most obvious, which is having a healthy cash reserve to start off with. I don't understand how lots of these traders come in today and they're only starting with a couple hundred, couple thousand. First and foremost, you have to come in, I think, with a healthy, hefty account. For me, if you're starting under PDT, it's really, really difficult to grow your account. And aside from that, I think just the experience. Like I said, a lot of new traders are just coming in, no idea what they're doing, no cash, and it's just you're already setting yourself up for failure by doing that.
Now, do you think if you have a full-time job or a job that, say, is like a work from home, like an outside sales job or something like that, that could allow you to build your account if you were under PDT, and you weren't full-time, and could possibly build your account up to where you could consider going full-time?
Yeah, you always want to save and do that, but I think that's another aspect of it. If you're working and you're trying to trade at the same time, for me, I was all in right from the beginning. I didn't have a job. I had my career already. I came into trading 100%. So all my time was focused on trading. I had my accounts. I had the capital behind me to start. So all of my energy, all of my time was focused on trading. I think if you're coming in, you're working your normal 40-hour work week and you're going to try to squeeze in some trading in the morning before work. I think like I said, you're already kind of behind the 8 ball in what you can accomplish in a short amount of time. If your time horizon is, I'm going to start slowly, learn, take a couple years, that might be the right way to do it. But if you're just coming in trying to make a quick buck, and you're at work, you're trying to look at charts, look at quotes, trying to trade for more small account, in my opinion, that's a real difficult way to do it.
Oh, absolutely. Because trading does require your undivided attention. Uh, Another thing with that is, so you came in obviously well capitalized. You clearly didn't take big risks starting out, and I think that's what some people do have trouble with: is they come in well capitalized but are undereducated and take big risks and can take some big chunks out of the savings and those accounts that they brought in with them. So when you started out, did you have your accounts a bigger size than they are now, or a smaller size than they are now, or you just took less risk?
No, so what I actually did coming into this, when I started, I had one account. I knew I was still learning what to do. I had a background in trading previously, but it wasn't day trading. Day trading is a completely different animal. So I came in, had one account. I had it over a pattern day trader rule, but I had gone below PDT several times with that account, having to refund it, get me back up, and that took me about 6 months, a little less than a year, till I got to a point where I started making money, started feeling comfortable. Then from there, I started opening up multiple accounts, funding my accounts more. So as you were saying, so from the beginning, that first account, I kept a small portion of my capital in it because I knew I would be losing money. I am learning. And every time I would take a hit, it would be a small hit, and I wasn't risking all of my capital or all the money I had in reserve for my trading.
Yeah,
Okay.
I think that brings up a really good point too. That very few people are likely to have a perfect predisposition that they're born with, that it's innate that they risk the perfect amount. Almost everyone is either geared to risk too much or too little. And when you are starting, each of those will have its respective issues throughout your trading career. But when you are starting out, risking too much when you don't know the market that well can really be a fatal flaw.
Absolutely. And
Yeah.
yeah, a lot of people don't see that, and you see all the time. It's like, oh well, I had too little risk on my winners and too much on my losers, and that's where I
And
am.
the psychological effect absolutely just compounds.
Mhm.
Let me ask you this, man. You've been through the FinTwit gauntlet. You've been through the community for a while. I'm sure you've seen the good and bad, a whole lot of bad. But what percent would you say is useful, and what percentage you say just somebody selling something? You got new people under PDT. How likely are they to find something that's viable as an avenue for them to continue as traders?
There's a lot to navigate through. I guess you would say on Twitter, and I think it's different as where you're at in your trading career and what you're trying to accomplish. I think for a newer trader, there's so much information, so much thrown at you, whether it's other so-called veteran traders, people selling services. It's a lot to go through in the beginning, and I remember a lot of the things I went through. I think a lot of it to navigate, it just comes with experience over time. You'll see who to trust, who to listen to, who to stay away from. But still, overall, it's just, and in my opinion, it's gotten worse over the past couple of years. I mean, I don't follow a whole lot of people, and the ones that I do, that I actually get useful information from, is maybe 3 to 5 people that I follow. So the majority of people out there, I think, are either just are ego stroking themselves, or they're selling something.
Ego stroking, social media, no way. No way.
And you know what? I've been there too. Social media is a tough thing. You want, especially with trading, and you're starting out, you want this acceptance from this online social media community. You want this acceptance. You want to be recognized for what you're doing, because essentially we're all by ourselves in front of screens all day. So you need some type of interaction.
Yeah, this is our validation.
Absolutely, that's what it is, and you get sucked in it. It's hard not to get sucked into that, and it feels like you're back in high school sometimes. Trying to be the popular kid on the
Oh
block
yeah.
and stuff like that. And I think if you navigate your way through it in enough time, you kind of know who to talk to, know who to listen to, and then I think a lot of people, I think when you get to a certain point after a couple of years, you're just like, you kind of get sick of it.
Now, you are one of the, I mean, in my opinion, you're one of the best fundamental traders in the microcap space. Do you think a newer trader is better served learning fundamentals immediately, or do you think, in the interim, just understand technicals and branch out from there and expand your playbook from there?
I would say technicals first and foremost, especially for day trading. The fundamentals and what I've learned are great. They tell a story about the stock and the company, but the fundamentals don't always they don't always reciprocate into day trading. Just because a company has bad fundamentals, or an offering is coming, or they're running out of cash, or they have a delisting notice or something with NASDAQ or something like that coming up, that won't always
Yeah, it won't always permeate an immediately bad price action. I definitely
exactly.
agree with you. I happen to agree with you also because I think there's so much nuance to learning the fundamental components of a microcap. What might appear to be bad might in fact actually be good, and that interpretation and the time frame for that, playing out could be a lot different than what a newer person expects.
Absolutely. I think if you're getting in early on and you're looking at fundamentals, and a lot of people just scratch the surface to what it is and actually not go in and look at the rules that are set and then what these companies have to follow. People just say, oh, there's an offering coming up, so they need cash, so let's short this, and not realizing all the rules and the regulations behind it, which I think is another important point. People don't dig deep enough into these rules and how to go about it and how to trade off of it.
Yeah, the rules they're very complex in a way, and very interesting. And yes, a lot of people don't realize those rules, and people just underestimate momentum in general. So for me, sometimes I can dig through some filings like, oh my gosh, like it's blatant how terrible this company is, but it makes me a little biased towards why wouldn't I go long? There's actually incentive here to get this thing higher. So why be bearish off the bat? And you have to let those things play out. So that is one thing I think if with me, when I dig in fundamentals and I'm looking for, say, a big win, be it on a short, be it whatever stock, maybe it's IGC this coming week, you have to let those things present themselves first. And when you're early, you're just wrong. But that being said, when did everything just click for you? Like when and how did you find consistency day in and day out?
I know everybody talks about that. Nothing actually just clicked for me. I know I started becoming consistent, like I said, between that 6 month to a year period, about a year and a half in. I knew I could come to the market and make money every day pretty much, as long as I stuck to what I was doing. Obviously, since that time, my trading has evolved. I'm a completely different trader than I was when I first started out. But just putting the work and the hours in right from the beginning, and figuring it out, I guess you could say. But even to this day, I don't feel that I have trading figured out. I'm always looking to add things to how I trade, to what I do, and it's different every day for me. I don't feel like I've ever mastered it. I don't come in and say, oh, I'm going to crush it today, or I don't take it for granted what I do and how successful I become at it.
I think the answer is so much in your response there, because I think anyone, regardless of how financially successful you've been in markets, you'll always view yourself as a student if you've truly, navigated this field, because there's a component you'll always need to learn, and there's an element of risk that you'll always have to respect. And therefore, even if you do have a positive expectancy, you're churning out money consistently, you'll never view yourself as totally there if you're actually in this. If you're a guru selling a service, yeah, I'm pulling Ferraris out of the market with my eyes closed.
Mm-hmm.
No question about it. So I think that's a good. I think people who are newer should appreciate that answer, because it's really important, and it's something I think you'll see as a commonality in people who've genuinely had a lot of success in the market.
And everyone's different, but how many hours would you say per day you were putting in starting out, and even maybe to now?
I would say even till now. I mean, Honestly, I'm up pretty early. I mean, listen, I'm not gonna lie. Everybody's like, "Oh, I'm up early," and I'm starting. Some days I'll sleep in. It's nice to sleep in doing this when you have the opportunity. But I'm up around 6, 7 o'clock in the morning, and it all depends. If I get into a company that I'm researching, I mean, I can be at my computer until 9, 10 o'clock at night, and that's trading all day, doing my research during the day. So I'll be in front of my computer 12, 13, 14 hours a day. That's kind of normal for me.
We need to partner with with an eye doctor here, so an optometrist, so we can all get free eye checks.
Yeah,
we need some coupons for free eye checks.
Shit, my next short of the week is going to be all of our day traders' vision in 20 years from now.
I've got LASIK, so I've got lifetime renewal. I'm good.
See, the bad thing for me with the bad thing for me with my office in my house is that right outside of my office, I have a rec room for my kids. So every once in a while, I will sneak out of my office and go play Fortnite.
Oh, I see you're part of the spare bedroom club.
Yeah.
Yeah.
Nice, man. Nice. Well, another question I want to ask you, because we just kind of blew you up a little, talked about how great and consistent you are, but I want to ask you about something the newer guys are going to be able to relate to. It's a segment. We're going to ask all our big guests this. We call it Poorer but Wiser. What happened in your trading career that seemed catastrophic at the time, maybe even career ending, but turned out to be a great lesson that behooved you for the future? So even though it might have been a big psychological or monetary hit and it felt like a fatal roadblock at the time, it turned out to be something that was great for you down the road.
I actually had two, and they were kind of back to back. They were within about a month of each other.
Oh, great.
And this was leading up to this. I was on a hugely consistent a win streak. Probably for several months, I had I would track my win rate, stuff like that. I mean, I was just 90% win rate every month, doing really well, pushing my limit and feeling great about myself. So coming into this, it was HTGM 2 years ago.
Mm-hmm.
2 years ago or a year ago it was. They had some kind of delisting coming up. They had earnings coming up, and I was short going into their earnings. I was short big. It was actually like the day of a delisting notice, and they were short on cash. And this thing, after hours, didn't go down. After the conference call was horrible, and it just started going up. I held overnight, added the next day, and it went from, I think, about 4, and this is just all going off of memory now, but I think into the high teens. Oof. And I think I covered at just about the top. And then 2 days later, they announced a big $75 million S3.
Oh, God.
So, again, that's where my due diligence behind it was correct, but my timing was off. And then another one right after that was GLYC. This was another one where my fundamental background got me too heavy into the stock. They had come out with some decent news, but the stock had overshot, in my opinion. I had a great average on a short during the day. I held it after hours. They had announced an offering without pricing. The next day it started floating up. Still had a great average. I added heavy, thinking there's an offering coming. I mean, this is going down. I think a day or two later, their pricing was like $17 a share compared to when they originally announced the offering without pricing. The stock was around 10 or 11. So through that time, I had never covered any of my shares, and I took another hefty hit on that one. So those two kind of got me more into the time frames of where my fundamental analysis and my technical analysis of trading a stock need to align better.
And I mean, an HTGM in particular, short into not to relive the pain, but short into earnings and added the loser. I would say those are international rules. I would, some things might be unique to an individual. Like I think my personal story for this segment, if I were to do one, would be kind of unique to me. That particular one, an HTGM, I think for everyone listening will be like a rule of thumb. It can apply to anyone.
Yeah. And
Never compound a mistake.
Yep, absolutely.
no, and we all have these rules, and even at that point, I was never one of those guys that would just be add.
Mm-hmm.
But that was, I think, at the time where I was getting away from my technical analysis of trading and relying more on my fundamental analysis and my research. And after those two trades, that's where I realized there was an imbalance between the two in my trading, and I had to make an adjustment. And I think through that, because that was around spring of 17. So going into that summer, or 16 or 17, I don't remember exactly. Going into that summer, I made some drastic changes in my approach to how I trade.
Well, listen, taking the lesson is really important. I think that's something that's going to apply to everybody. Um, I don't think this is a bit that there's a single trader out there that this doesn't apply to. I don't think there's someone who's like, actually, it's just been smooth sailing for me since day one.
No, that doesn't happen, or you're a paper trader.
Right. Paper accounts, God. I mean, there's some traders I'm not. When we have more than like 27 listens on YouTube, we'll call out these people by name. So some motivation for some of you people to listen out there. But if anyone alludes to the fact that it looks like it's just pure smooth sailing, chart starts bottom left, goes to top right, be skeptical to say the least.
James, who do you think you've seen that are some of the better technical traders in the quote-unquote community, or that you could point someone towards, or where you think the best place to learn is if it's not a person or a service?
Aside from listening to Under PDT every episode as soon as it comes out.
Yeah.
Well, aside from PDT, which would be my first go-to, I've been through the gamut in the community. I think I've been a service whore, if you want to say. I've kind of gone there and been checked out everybody and tried to learn a little bit from everybody that's out there, good or bad. I think, and we both know him personally, Wes, JM All Day Holds. He is a great technical trader. His style that he teaches, I know added a lot to how I trade technically. I still incorporate a lot of things that he taught me in my trading today. Dan Shapiro is another one. His own technical style is very niche-y in a way. Exactly what he does is very defined in how he trades. Dan is a great guy. I think if you like what he does, his style, that works very well. Obviously, it works very well for him. He just works on bigger time frames. But yeah, JM, in my opinion, by far out there is one of the best technical traders, and he teaches it very well.
I like JM because it's very black and white, and that's what you get with his technical analysis. And I like Dan as well. What I like about Dan's higher time frames is I think it actually takes a lot of emotion out of technical analysis, especially for beginners, because you are watching 1 hour candles and you're getting 6 candles a day, and it either confirms in these levels or it doesn't.
That's such a good point, man, because how many people who are new are like on a 1 minute chart, like with their eyes pinned to the screen at 9:30 when it's wild, wild west time anyways, and just going off the most absurd technical indicator, when in reality, you need to step back, breathe, and see if this is objectively an edge.
Mm-hmm.
Yeah. So, James, we're going to wrap it up here soon. Is there anything you want to be able to say while you're under PDT?
Until you come back next time, in like a week.
Yeah, you're a friend of the podcast. But,
okay.
Anything you want to say? Not to put you on the spot.
No. The use of the soundboard, I like it. No.
All right, there you go.
We'll get it started up for next time.
Yeah. We'll let you start it up for next time. But we appreciate good, long, and short of the week. I think we're going to call it there because as good an interview as James is, Wes and I are not really. We're not interesting past the 25-minute mark, we noticed, and we're at 24 minutes and 47 seconds. So, guys, we appreciate you checking us out. Again, send us trades, send us feedback. We all want it. Check out some of James's commentary on Twitter, AiPTrades. And we look forward to having you guys listen to our next episode. We have some good guests upcoming. And everyone have a good trading week.